Done? So students, today we are going to learn some concepts in our taxation subject taxation. Okay, and the chapter's name is income from house property. Okay, so there are some concepts in the income from house property which we will learn now. The first concept is unrealized rent and recovery of unrealized rent. Okay, now what do you mean by unrealized rent? Unrealized rent means rent which is not recovered by the owner from the tenant. So students, unrealized rent is that rent which is not recovered by the owner from the tenant. Okay, it is like a bad debts of rent. It is deductible while calculating the actual rent. So students, whenever they give you unrealized rent in your question, you have to minus that unrealized rent from your actual rent. See this, actual rent is equal to rent received plus rent receivable minus unrealized rent. So students, always remember, whenever unrealized rent is given in the question of your income from house property, so that unrealized rent you have to minus from the actual rent. Okay, so remember that. Now, what is arrears of rent? Arrears of rent means the rent under dispute. Okay, suppose for example, you told the tenant to pay 10,000, but later on tenant told no, I will pay only 8,000. Okay, your premises is not providing me the facilities worth 10,000, I will pay you only 8,000. Okay, so you went to court. Okay, you went to court, and then court told you, court gave the decision that the tenant has to pay 10,000 rupees, not 8,000. Okay, earlier the tenant was paying 8,000, but now court told the tenant to pay 10,000. So 2,000 rent extra that he is supposed to pay, that is known as arrears of rent. Okay, now section 25A, students, you should remember this section. Section 25A deals with recovery of unrealized rent and arrears of rent. Okay, now listen. Recovery is taxable in the year in which it is recovered under the head house property, whether the assessee is the owner of the property or not in that financial year. So students, always remember, the unrealized rent which was not recovered earlier, if it is recovered, okay, if it is recovered, so the recovery of that rent, recovery of that unrealized rent will be taxable in the year in which it is recovered. Are you getting it, students? Unrealized rent, the year in which it is recovered, in that year it will be taxable irrespective of whether assessee is the owner of that property in that year or not. It will be taxable. Okay, remember that, the year in which it is recovered. I am repeating again, unrealized rent recovered will be taxable in the year in which it is recovered. Okay, irrespective whether the assessee is the owner of that property or not, it will be taxable in the year in which it is recovered. Any expenditure incurred for such recovery shall be ignored. So always remember, students, expenditure incurred for the recovery of unrealized rent or arrears of rent should be ignored. So in question of house property, if they give you expenditure incurred for the recovery of unrealized rent or arrears of rent, so you have to ignore those expenditure. Will you remember that, students? Okay, very good. Okay, now let us take some examples to understand these concepts. Okay, let's take case number 1. Now what does case number 1 says? In case number 1, unrealized rent was rupees 60,000 in the previous year 2020-21. Okay, then the rent allowed by assessing officer was 35,000 rupees. Okay, now what happened? You informed the income tax that your unrealized rent, the rent you did not receive from the tenant, was 60,000. But income tax officer was not ready to agree. Income tax officer told you no, your unrealized rent is only 35. I will allow you only 35,000 as unrealized rent. I don't agree with you that you did not receive 60,000 rent. No. Okay. From 60,000, I will allow you only 35,000 rupees as unrealized rent. Okay. Now what happened? Recovery during the previous year. In the previous year, what is the previous year for us? 2023-24. So in 2023-24, you recovered from this rent of 60,000. In 2023-24 previous year, you recovered 52,000 out of this 60,000. Understand, students? So how much amount will be taxable out of this recovered amount? That we have to calculate. How much real unrealized rent which you have recovered in this previous year will be taxable, okay, out of this recovered amount. Now how to calculate the taxable amount? Now pay attention. Taxable amount is equal to the amount you recovered minus the disallowed amount earlier. Disallowed earlier means the amount which was not allowed by the income tax officer earlier. Now student, you tell me how much was disallowed earlier. See, your unrealized rent was 60,000 rupees. Okay, you told income tax officer that the tenant has not paid me 60,000. Okay, but income tax officer did not agree and he told I will allow you only 35. So tell me how much he disallowed. So 60,000 minus allowed 35,000. He disallowed you how much? He disallowed you 25,000. Are you getting it? See, 60,000 was your unrealized rent, but income tax officer did not allow you 60,000. He only allowed 35. Now students, the assessing officer allowed means this much only I will allow you as a deduction. Understood what I am saying? Okay, this much only he can allow. Unrealized rent means what, student? You have not received it. See, unrealized rent from where you minus? From the actual rent. Students, see, unrealized rent you get to deduct from where? From the actual rent. So suppose if you minus the unrealized rent from the actual rent, your actual rent will become less and your tax will become less. Remember that. Understood? Okay. So assessing officer told I will not allow you to minus 60,000 rupees from your actual rent. Okay. I don't think so. Your unrealized rent is 60. Your unrealized rent is 35,000. Okay, understood. So how much he disallowed? 60,000 minus 35, 25,000 he disallowed. So how you will calculate the taxable amount? So recovered amount minus disallowed amount. So 52,000 minus 25,000, taxable amount will be 27,000. Now students, you get 30% deduction on your rent. So here also you will get 30% deduction. So what you will do? This 27,000 taxable amount, you will only take 70% of this, because you know 30% is what? Standard deduction. Na? So that you will minus. You will not take standard deduction. Okay, remember this. So 27,000 ka 70% will be taxable. 30% why you left? Because it is a standard deduction. You take standard deduction, na? You get standard deduction in your calculation. So here also this unrealized recovered amount, you will get a standard deduction. Okay, so 18,900 will be the taxable amount. Now let us take case number 2, students. Okay, allowed by AO, assessing officer allowed you only 5,000. See, rest of the information is same as the case 1. Unrealized rent is 60,000. Here only allowed amount is changed. Assessing officer allowed you only 5,000. Okay, you told assessing officer, sir, my tenant did not pay me 60,000 rupees. Assessing officer told you, no, I don't agree with this. I think your unrealized rent is only 5,000. Remaining all amount you have got. So you can only minus 5,000 from your actual rent. Okay, now how much will be the taxable amount? Taxable amount is equal to recovered amount minus disallowed amount earlier. So recovery, how much amount you recovered? See, same amount. Recovery during previous year is 52,000. Okay, 52,000. Pay attention, student. How much disallowed? How much the assessing officer did not allow? See, he allowed 5,000. 60,000 was unrealized rent, but he allowed 5,000. So how much he did not allow? See, 60,000 was the unrealized rent. Assessing officer said no, your unrealized rent is only 5,000. So how much he did not allow? 55,000. So 52,000 you recovered, he did not allow 55,000. So answer you will get in negative. So negative answer means nothing. No taxable, nil. You have to pay nil tax. Always remember, if you are getting negative amount in this calculation of the taxable amount of recovered rent, so you have to take a taxable amount as nil. Whenever we are calculating unrealized rent recovered ka taxable amount, if it is negative, so tax will be nil. Don't write negative there. Are you getting it, students? Okay. So this, I hope you have understood what is unrealized rent, recovered and arrears of rent. Understood what I am saying? Okay. And always remember arrears of rent. So arrears of rent, it will be fully taxable. If arrears of rent is recovered, it will be fully taxable, but you will get a deduction, 30% deduction you will get, standard deduction. Remember that on arrears of rent also. Arrears of rent means it was in dispute. No, there was a dispute between you and the tenant. Tenant was saying no, I will pay 8,000. You are saying no. Then it went to the court. Then court decided the tenant will not pay 8,000, he will pay 10,000. So 2,000 will be arrears of rent, he has to pay extra. Okay. Now students, look at this. What is this? See, whenever you are solving the sums on income from house property, you come under many other expenses. That time you get confused what to do this with these expenses, whether we should ignore. Look here. In your income from house property question, lot of other expenses will come like repairs and maintenance, society charges, parking charges, okay, insurance charges, electricity, water charges, life charges, etc. Okay, now students, remember, for all these charges, the income tax have already given you a 30% standard deduction on NAV is allowed to you. Okay, that 30% standard deduction on the NAV is given for all these general types of expenses. Okay, so you can't claim these expenses separately. Okay, instead of these expenses, the income tax has already given you the standard deduction that income tax has given you, 30% standard deduction on NAV. That deduction is for all these charges only. Okay, so income tax is saying, okay, you have other charges, expenses you incurred, we will give you flat standard deduction on NAV. But then after that, you don't claim any other type of deduction for expenses. These are not allowed. You will not get to minus. Okay, in income from house property question, if these expenses come, don't minus it. Okay, because for this you have already got what, 30% flat standard deduction they have already given. So don't minus this, just ignore them. You have to ignore them. Understood? Don't minus it from income from house property. Are you getting it, students? So I hope this lecture is clear for all of you. In next lecture we will do the sum.